All right, we're going to go live in a moment. Hello, everyone, and welcome. This is Sergio Marrero, and we're here with RBL1 Live. We have a special guest today. Always loved speaking to Roy Bahat. He's head of Bloomberg Beta, and it is a fund focused on investing in the future of work. They're on their third fund now, about 225 million under management. And I'll turn it over to Roy. Thanks for joining us today.
Thank you. I don't know what to turn me over for because I feel like, you guys have all the interesting questions. So I'm happy to be here and talk about whatever's on your mind.
Great, great. Well, if you first, if you can share a little bit more about Bloomberg Beta with the audience.
Sure. So on some level, we are just a VC fund. But what's different about us is that, what's similar about us to lots of other funds, we're an early stage fund. $75 million fund is the current fund size that we invest out of. 3 equal partners. What's different about us is we've been focused exclusively on the future of work since the first day that we launched our fund. We were the first fund to focus on AI, over my objection at the time, as the main technology that we thought would shift the future of work, which we started focusing on in 2014. And there's a bunch of weird stuff about how we operate, which is to say we try to model the kind of behaviors that we want to see out there among startups in the world. So like extreme transparency. You can go on our website and, I think you know this, but you could see what was once upon a time our internal operating manual, like what questions we ask in diligence, blah, blah, blah. And, now that we're 7 or 8 years in, we've also had a chance to just serve some amazing founders. And I'm happy to talk about some of the companies, but I'm really just grateful, especially in this moment in the world, for how they've been trudging through.
Yeah, and especially since you touched on that topic, especially at this time, we all know that, COVID, global pandemic, challenging times. I like to hear what are some inspiring stories you've seen from your portfolio companies as they've tried to innovate and keep pace.
Oh, pretty much like every story of talking to them all the time is inspiring. Everything from, there are folks who have been working on issues that have come up now for a long time. Like I'll give you an example. We're in the first round in a company called Textio, which is AI that, among other things, while you're editing a job description, will enable you to improve the quality of the applicants who will eventually apply when you put that job description out in the wild. So it's like a word processor that predicts the future instead of just correcting your spelling mistakes. And they've been thinking about bias in language and hiring for forever. And now there's like this kind of moment where like a lot of folks on their team are like, yeah, this is what we've been waiting for. And so talking to them about that energy level, which, for lots of people I'm hearing is as unnerving and, like they don't know what to do about it as it is exciting, like our moment's finally here. So that's one inspiration. We invested in Flexport, the freight forwarder, and man, like day one of the pandemic, they just turned all this expertise toward helping get masks and other personal protective equipment into the country. And so like big companies like that, tiny companies that are like, look, we've been funding companies that we never met in person and have been active in doing it, and just hearing the stories of how people are trying to figure out what to do and, like caring for their relatives. I don't know. It's like, there has been so much inspiration. I really appreciate that you asked about it. We call it, by the way, our wow moments. We see founders as our customers, and we take that really literally. Like we use NPS of the founders rating us as the #1 metric for our fund. And we take it so literally that we asked, who has the best customer service training in the world? Let's go do that customer service training. And so once at one of our team offsites, we went and did the Ritz-Carlton's customer service training. And they do this daily ritual, which we do in our team meetings that we do twice a week, that they call their wow moments, which is basically like, when did you have an experience, in their case, with a customer where you feel like you really lived the company's values and, you showed them something that was truly extraordinary? And we try as often as possible as a team, to share those moments. And sometimes it's hard stuff. Sometimes it's like, look, for the investors who follow you and the founders who are there, they know. But like sometimes it's like, oh man, our first customer just sued us. What do we do? And being there for founders in those moments, difficult personal things, and their moments of inspiration, hey, we just got the award we've wanted. One of my favorite things is when founders get an O1 visa, an extraordinary person's visa, all that stuff. There's been tons of it, tons of extraordinary stories in the last few days. So long-winded answer to a simple question.
No, I love it because it's always that's one of the inspiring things you see. Entire companies pivot. One founder we spoke to that she does I would say Party Dash, and taking Party City online e-commerce, and then shifted gears to entertainment company for kids, but utilizing the community she has, right? So it's continuously, like you're saying, there's a lot of room there. Wanted to dive in deeper to what you were saying about some of the work that people have been focusing on, what needs to be done. Not only is COVID been a challenge, but focusing on the institutional racism and trying to elevate communities of color. Can you talk about what do you see happening that's moving in the needle in a good direction, and kind of models to follow in that regard?
So let me talk about some stuff at the VC system level,
Okay.
and then some stuff that's close to home. At the VC system level, I think, like, my view on this issue is this issue would be a lot harder if you had to choose between making money and doing the right thing. But, like, honestly, the way we think about it is their racism is our profit opportunity. Like, by backing founders who are underrepresented, or, as Arlen Hamilton says, underestimated, we can perform better than other funds. And if they don't look, I want to look. And I feel the same way about backing anybody who is from an underrepresented group. And so the mystery, of course, has been, given that belief, why isn't more of it happening? And the answer is, like all opportunities, it takes skill to take advantage of the opportunity. And on our team, we didn't feel like we were leaders on this issue. We still don't feel like we're leaders on this issue. We feel we have a lot of learning to do. I have a lot of learning to do. We've been trying to do it. Our goal was to be a good citizen. We just wanted to try to do the right thing. And so, as we always do, we're public about our approach. So you can go on our website and you can see all the different actions and commitments we've taken and where we collect data. And, we try to affect the pipeline. I host weekly office hours that I think this Friday is going to be the 151st or 152nd Friday that I've hosted weekly office hours for founders from underrepresented backgrounds. And so the way I see it, I guess, on a systems level, is we've entered this period of awareness of the issue. Of course, there have been people who've been working on it deeply for a long time, but for the kind of typical fund for whom it's like, oh yeah, they probably cared about it, but they didn't put a lot of effort into it. Now it's this great period of experimentation. How are we going to figure out how to do this? What communities are we going to reach out to, et cetera? And so I'm excited to see what works and what doesn't, because the practical person in me is like, yeah, let's do the right thing, but let's do it to win. Like, we want to back the very best founders, and the very best founders, there's no chance that the very best founders are 90% white men. Like, that just can't possibly be. More kind of close to home, one of the things I've noticed that's been really encouraging to me is I'm having a lot more conversations with white men. Had one earlier today, that are like, hey, you said that thing and it made me uncomfortable. How did you think about this issue? Why did you say it that way? Does the word privilege bother you? Why does it bother you? And those conversations, it's not like they never happened before, but nobody is an exaggeration. Two people rarely prioritized it. And now it's like you have that moment in a meeting. I mean, I just sent another investor a text this morning. I was like, hey, that thing you said to me yesterday about this founder of color, it made me uncomfortable. And it took a little bit of, like, I don't know, courage, but I had to think about how to say it. It took some effort. And now we all want to put in the effort because we want to get it right. And so I want to put in the effort, and I see many other people trying to put in the effort. So I'm hopeful that we're going to lay a foundation of behavior change, but I also know it's not automatic. We got a lot of work to do. And look, as a straight white man, I have to do the work of learning. And I've had my moments where somebody said to me, like, that way you behaved wasn't appropriate. I'm like, yeah, you're right. I got to learn. Sometimes I was defensive in the moment, but now I'm seeing it.
No, I'm glad. I'm glad you brought that up, because even on a previous interview we had Samara Hernandez. She's managing partner of Chingona Ventures, and she said the same thing. She goes, "It's our responsibility to institute the dialogue, even if we're gonna say the wrong thing and be comfortable with being wrong and being corrected, and getting there.
And I grew up in an immigrant family. We express love through interruption. I resisted the privilege label myself because my parents are immigrants. Like I said, they came to this country with nothing, but we didn't think of ourselves as hard on our luck. We just thought of ourselves as like trying to make it in America kind of thing. And I've had many advantages. Obviously, I've enjoyed many forms of privilege, but like, I grew up, my mom raised us alone because my dad passed away when I was a kid. And so I really personally resisted this privilege label because I was like, I fucking busted my ass. Like, you're going to put that privilege label on me? Like, put it in the kid with the silver spoon in their mouth. And then what I've begun to realize gradually over the last 10 years is it's not like you have privilege or you don't. For me, it's been this awareness of I'll use the word skill again, but the skill to see the details of like, yeah, I've enjoyed many forms of privilege, not every form of privilege, but many. I got to be conscious of how that plays in. And the stuff that makes me crazy about, this is like, if you said, what do I hope will change? I am sick and tired of seeing generally rich white men in tech and venture say the number one factor for success is grit. Because what's frustrating about it is like all things that are frustrating on some level, of course it's true. For you as an individual, for me as an individual, the number one thing we can control is our effort and perseverance. But that is often code for, and therefore we don't need to do anything about our society, because if only all these people had more grit, they could succeed too. And they point in an example of somebody who did it, which of course somebody did it. But it discounts the fact that we have a system, and the number one factor in being rich is being born rich, like period, end of story, full stop. And so it's not grit, it's being born rich. Grit is the number one thing you can control. And so I want to change the system so that people in tech are more aware of how these broader institutions, economy, society, government interconnect, because I just think we'll do better at what we do and we'll live in a more just world.
I love that. I want to dovetail into a little bit more of your story on why you care about that, where you started. I know previously you were president of a media company, IGN, and if you can share a little bit more of your story about how you ended up leading Bloomberg Beta.
I mean, I've had a random walk. Like, I didn't know what I wanted to do until a few years ago, until probably 10 years ago. I mean, I worked at a consulting firm out of grad school because I thought business was important. Like, I should understand it because I guess I should understand rich people. And, then 9/11 happened and I went to go work in city government in New York where I grew up. And then I was unemployed for a while trying to figure something out. I'd wanted to be in the media business. I got hired by a big media company. I got transferred to San Francisco. I didn't even like tech. I wasn't even that into it. But then when I landed inside of a tech company in San Francisco, which honestly, the only reason that I was in charge of it was because the people at the big media company trusted me and I was willing to move to San Francisco. Like, by no other measure was I qualified for that job. It was unfair. But what I learned is, of all the different ways you can change the world, tech startups are just the one I like the best. They're the most fun. They're rewarding. They're fast. And then I started a company with a woman who used to work for me. She was a CEO. And that was a brutal experience. I mean, just emotionally so up and down. The pain still lingers. I would start another company if I'd felt emotionally prepared. But the Bloomberg people called me, and I'd worked with them in city government. They said, oh, we want to do a corporate VC. And I said, don't do that. Corporate VCs never work. And they said something which I'm now learning is very Bloomberg. They said, okay, that's great. You don't want to do it. You don't think we should do it. What would a version of it that would work look like for someone like you? And then we designed what became Bloomberg Beta. We invest to make money. We're not a strategic investor with some other ulterior motive. We're focused on the future of work because I thought there was opportunity there and it was relevant to Bloomberg. We just have a normal fund structure. We write normal checks, $500K to $1 million. Like, there's no, I don't go to somebody at Bloomberg and ask for permission to write a check. And part of the rationale was honestly it'd be emotionally easier than starting a company. Part of it was I saw so many VCs doing their jobs poorly. And a lot of the time I was like, maybe I just don't get it, or maybe they just suck at their own jobs. And so part of me just wanted to prove I could do it better. And I think that takes a long time in venture. I think we're early in that. I think, we're not there yet, but I hope we're on path to doing that. And, this is the first job I've ever had where I'm like, I could keep doing this for the rest of my life and be happy. I'm an adrenaline junkie who likes to learn. And look, the reason why I care about showing up for communities that are underrepresented isn't because like it feels good to do the right thing, although it does. It's because it'll be more fun and we'll get better companies if we have a more diverse group of people starting them. And, just as one thing we did on this, and then I'll shut up, you should ask me more questions. When we started our fund, we're investing early. As I said, we treat founders as our customers. And it's like, okay, if I went to a startup and I said, how are you going to meet your early customers? They said, what do you mean? We will wait for our network to introduce them to us. You'd be like, that's lame. You'd go prospect. And so I started wondering, how can we meet companies before they're raising money? And we said, well, surely somebody must have tried to predict who's going to start a venture-backed company. And we couldn't find anybody, so we did it ourselves. We ran an exercise that we called our Future Founders effort. We've now done it, I think, 4 times, where we use a data model on public data and predict who are the 350 people in tech, Bay Area, New York, that's where we invest, Bay Area, East Coast, really, but Acela corridor, however you want to put it, who are most likely to start a venture-backed company and have not yet done so. And guess what? The list is older, more female, more black and brown than the backed list of current venture-backed founders. So we reach out to those people and kind of Publishers Clearinghouse style, tapped them on the shoulder. We're like, we have something for you. And, it's been great getting to know a lot of those people, but that's how we try to do it.
I love that. That's getting them in reading. Well, for those that don't know, and if you missed it, Roy talked about making their manual or entering operating manual public. So if you go to BloombergBeta.com, the link is also in the live stream. You'll be redirected to the GitHub with that information, that manual, and you can read it. They update it quite frequently.
You can put in a pull request. You can change it. When founders are like, how do I get listed on my website? I'm like, submit a pull request and we'll just approve it, or we put it in ourselves. But yeah, thank you for that, Sergio.
No, definitely. I remember going to your website for the first time and being redirected to GitHub, and I thought it was
what is this?
I thought it was an error, and I was like, what? Let me do that again. And then went in and saw that it was a real manual. And it was no, it was great. It was great. But I love that, because we've published quite a bit on for RBL1 on the process and trying to make venture more transparent, especially I think that's part of the challenge for early stage founders.
And it's real work. Like, it took effort to do it. In the beginning, my teammates pushed back. They're like, what? We'll give up, like we're going to tell them our average valuation. It's like, I don't know, maybe they won't negotiate against us. But in the end, what it does is it improves signal to noise, because founders can disqualify themselves from pitching us if they choose to, or we can learn that they didn't care to, which is also a data point. And one of the things we believe about work, in addition to transparency, is we think if you want to see the future of how work will operate, one place to look is how software developers work, because they'll oftentimes invent ideas that will then propagate out to the broader business world. Like, you'll now hear somebody say informally, oh, there's a bug in that process. Well, that's a software term. And so using GitHub as the content management repository is a practical thing to do. It's not a trick. It's like, that's the best place to manage. That's where our customers live.
Especially when you were talking about finding founders early. You guys like to be the first checks, $500,000 to $1 million for the ones you like to leave. So, that's a great strategy, and to touch them, get them before they're on the way, and you're helping.
That's the hope. There. No, we still miss stuff all the time. I mean, every early investor is like, oh my God, how did I not see that? And those are, for us, as painful as the ones that we saw and passed on. But, one of the things about VC is you spend a lot of time kicking yourself, and it takes a long time to know if you're right. One of the things I didn't fully factor in is, all those other VCs who are not that good at their jobs, well, they could still sit in the seat for literally 20 years riding off some earlier thing while they raise fund 7, 8, and 9. And so it just takes a while to flush them out of the system, but I think it's worth it.
What, in looking at founders that early, so I know Charles Hudson does something similar, right? Yeah. Is what are the critical success factors? I know you mentioned, software development background, maybe in the.
Well, they don't have to have a software development background. That can help. So we also try to be public about our criteria. Yeah. And if you look at our criteria, they're set up differently than many other people of what you see. What you often see is a checklist. And I think the dumb thing is, if you look at the checklist, it's like, okay, but not every company has all those things. Like, I'll give you an example of one. Founder market fit. Did Brian Chesky have founder market fit when he started Airbnb? Did Katrina Lake have founder market fit when she started Stitch Fix? I mean, I don't know. And so we just try to think like, would that have stood up the test? Market size is another one. Like, what was Facebook's market size when they started? Well, now it's obvious that it's big, but at the time it wasn't. And so we just try to think about what are the real criteria. And there are some things on the checklist, like we got to trust the person, we got to be able to get in on fair terms, whatever. But the real differentiator is, and then, by the way, we narrow the world. So we're only looking at a certain kind of company. We do define the future of work really broadly, and we don't invest in any financial services because we're not a strategic investor. But when you think about like once you've narrowed to that range, and then I feel like, okay, I have a chance to have the best judgment about this company of any investor in the world. A chance, not say I will. I just have a chance. That's all I want. Then the question is, you know, basically, how do I find one reason to believe, one reason that there might be a fact that tells me this company might be extraordinary? And it could be the background of the founder, it could be a product insight, it could be early metrics, you know, all that stuff. And which fact it is, that varies depending on the company. Like oftentimes you're like, well, it's all about the founders. Of course, in retrospect, it's all about the founders. But like this idea that you could just look into somebody's eyes and know that they're an extraordinary founder, if somebody knows how to do that, it's not me. Like extraordinary founder is like Tony Fadell designed the iPhone, or the iPod, whatever. Now he's doing a hardware startup. Okay, that's an extraordinary founder. I could tell that. But otherwise, we're looking for these subtle cues of greatness, but it is a fact. And it could be an insight. It could be a metric. It varies. We list a few things on our website, but that's how we think about what we're looking for at the early stages. And at day zero, sometimes that's hard to see.
Got it. And for going back to what you said about corporate venture funds, so for people that may not be familiar, usually they end up not being financial first and being more strategic, right? More aligned with where the business.
Well, strategic usually means something that is in the career interest of some executive at that corporation, for as long as the executive in that role.
Yeah, and not necessarily returning the the investment or the fund. How do you structure that at Bloomberg Beta? And I know it has some of it as that the independent trigger pull, but how do you maintain it? I think that is one of the hardest things in corporate venture.
Like any LP, you got to manage your LP.
Okay.
You have to deliver value for them. And so we spend about as much time as a normal fund on LP relations. It's just that we have one LP, and so like, you know, we'll talk to people at Bloomberg all day long, mostly technical people. The engineering CTO groups we're close to. We'll talk to them all day long about like, here's some trends we're seeing. You know, we talked to them about RPA early, chat early when Slack was popping. And we ended up investing in Slack. We don't talk to them about our portfolio companies with anything confidential because we are fiduciaries for our portfolio companies. But it's all sort of like how some corporations have a market research group. We just talk to them about what we're seeing. And if they get value from that, plus whatever money they make, although honestly, you know, our fund relative to the enormous size of Bloomberg, my guess is Bloomberg LP spends more on like, I don't know, pick your office furniture category or something than on our fund. But so it's not about the money. It's that trying to back great companies, which want you to back them with aligned interests, is a great way to understand what's happening in the world. And Bloomberg understood that as a 30-year-old, then very successful company, they didn't quite know, you know, they would often get blindsided by stuff that had hit them too late. So we're one more way for them to see what's coming around the corner.
That's that's the best lens you can give them. So.
Well, and I'll just say it was painful, like meaning day one, they're like, why don't you just start? I was like, well, no, we need proper fund documents before we start. Like, why do you need that? We could just, you know, and it's like, no, trust me, we need to set it up the right way. And so we probably delayed 6 months getting the fund set up properly, LP, GP, management company, proper legal structure. And, you know, and still we're always figuring it out. And, you know, you can have weird situations. Like somebody at Bloomberg will call me and be like, hey, I see this vendor we're negotiating with is a startup you invested in. Can you get me a deal? And I'm like, no, I don't think you understand. I'm on their side of the table. And at the same time, then they might come to us and say like, hey, we ran into an issue with that vendor. Can you help us work it out? And of course, then the answer is yes.
That's great. I know we've spoken before about just the evolution in the venture space. You've mentioned your interest in potentially funding emerging fund managers as well as startups. Can you talk about how you're thinking about that and why you're considering that?
Yeah, I mean, short version is we back founders at the earliest stages. Some founders' business model is enterprise SaaS. Some founders' business model is freemium direct to consumer. Some founders' business model is venture capital, meaning they want to start a venture capital fund. And we're in a position to be able to assess it. We don't do it very often, very, very rarely. But when we do it, and we're public about this on our website, we buy not just an LP interest, but we try to buy the firm itself, which is something common, a piece of the firm itself. It's something common in hedge funds, but very rare in VC. Although many other funds have done it over time. And so we're just trying to, just like with a startup, align long-term interests, back a founder we adore, and get in business with them.
And and where's the? I know you mentioned that you don't fund competitors, or you don't invest in competitors. With you talk about Bloomberg or
Yeah.
even with the other portfolio companies.
Well, no. Bloomberg competitors we could invest in.
Okay.
That's not an issue. We stay out of financial services mostly because we want to stay out of Bloomberg clients' way, and it's too confusing for us not being a strategic. But we won't fund competitors of our portfolio companies.
Got it. Yeah, that would get complicated.
Well, I mean, it gets tricky for everybody, especially for a specialist firm, because like, how do you define competition? And it's like I mean, Amazon and Google are competitive now. Like, okay, you couldn't have seen that when you were an early stage investor in either one. So like our short version is it's in the eye of the founder. We ask them and we have a conversation with them. And if ultimately they say, no, this is too close for comfort, we pass.
Great. That's good vision there, or transparency there. For you, what I want to shift to, you've solely focused on the future of work. How are you defining that as you're going out into the field looking at these future of work companies?
Yeah, really broadly. I mean, I think there's a mistake in how the startup world is now defining the future of work, which they mean basically productivity tools for office workers.
Mm-hmm.
And like, look, we love productivity tools. We're investors in lots of them. I was just using Range earlier for my team check-in. And we had a small stake in Slack, like I said, et cetera. But the future of work is much bigger than that. So we think about what are the occupations people are going to be in, what are new entrants into industries that can model doing something entirely differently that we might understand. So basically anything that makes work happier or more productive could be anything in the work stack. Data infrastructure, we do a lot of AI tools, business applications like CRM, we're investors in copper, productivity tools, media, plus we're investors in some companies like Flexport that they are entering the business world with a profoundly new model, new way of approaching a traditional business. I mean, in the case of Flexport, there's no business model risk. They're a freight forwarder. There's customers. It's not like they're trying to cook up some magic. The question is, can they serve those customers with a highly superior product by embedding technology deep in the core of what they do? And that was our bet.
And what are some of the areas within future of work? I like how you slice that up, because I feel like every firm that's investing in this area they structure it differently, right? It could just be
our goal is to be as broad as possible, although to be fair, there's certain areas we just don't know that well. We don't know local that well. We certainly don't know healthcare. So it's the future of work without financial services, and like with everybody else, there's sort of an irregular border to the stuff that we just happen to understand. But sorry, I didn't mean to cut you off.
No, I was on that. What are areas that you're most excited about in the future of work?
I got to be honest, I always struggle with this question because I don't think that way. I just wait for great founders to tell me what they're excited about.
Okay.
Right now, I'll say one of the things I'm paying attention to in the tech world is the rise of the power of labor in tech and tools for organizing working people. I think that's a big thing both in this country and in tech. I'm very interested in what I call little AI, which is to say like small applications of things that just work right out of the box. I mean, for the more technical people, a lot of AIs, they probably know, is just linear regression. It's not like high science, but we have a lot of business value left to produce in that. But I have a pretty loose lens on, there were times when like I wanted to fund a group professional development business, and then we funded some. And so, I'll occasionally have an idea, but mostly it's up to the founders to bring the vision. My job is I'm supporting cast. I'm the corner coach. I'm there when they get beat up in the face. I want to mop their brow and send them back into the ring.
And what on that topic, since you're heading into the, you're in your third fund. Um, what are some of the biggest things that you've learned now that you're moving there?
So many. I mean, there are ones where the lesson's clear. Like day one, we started the fund. I'd been a founder. I was like, maybe we'll incubate some stuff too. In fact, I think our first headline was like make and invest or something like that. And I was like, okay, too hard to do both those things. Let's focus on one. Hard enough to be an investor. Let's just be an investor. So there was some stuff like that. I think I've learned a lot about how to support. I mean, there's a lot of tradecraft details. Like it's sort of like asking a carpenter, like, what did you learn about how to build a table? They could tell you, but like really it's 1,000 little things. And I kind of feel like that. There are lessons that I'm not sure what to make of. Like there are plenty of great companies that we passed on price. Were we right or wrong? Probably wrong in that instance. But if we had done other things that were that level of risk at that price, maybe our fund would be worse returning. So it's really hard to say. There are some of those things that we're just trying to figure out what to make of. But I think those are some of the things. I mean, the power of focus is probably the single, if you ask me one word lesson, focus. I'm like religious about focus.
That's great. And I think on the focus piece, do you switch focus from fund to fund? Like in the third fund, did you shift or?
I mean, it evolves slowly. I think one of the harder things about transitioning from being an operator / founder to being an investor is that the pace of evolution in venture, it's like your reputation evolves slowly. You invest every so often. It's not like, oh my God, it's Q2. I need my Q2 project. You need to evolve. If you have too much churn, nobody knows who you are. So in the main, our primary focus has been unchanged for 8 years. Mm-hmm. Now, how we do it, what terms, what our relative emphasis is, lots of like details. But I kind of think of that like, curling, the Olympic sport. It's like, they roll the stone down the ice, and then we love Canadians too at Bloomberg Beta. They're my favorite Americans. And somebody's sweeping, gently correcting the course of that thing. That's kind of how I think of a venture fund's focus.
Got it. And on that topic, because I feel like you've innovated the corporate venture fund, right? And the venture capital.
Well, to be fair, Google Ventures, before they renamed GV, what became Sapphire, like we're not the first ones to do it this way. We have our own way, but like we're definitely borrowing from threads and traditions.
No, absolutely. I love the way I think their independence and the way you've set up that independence does bode well for, better returns. And
I hope so.
Yeah.
From your lips to the returns ears.
That's right. What on that, taking a step up into venture capital itself is like, what do you think you think venture capital just serves a role, and there are other areas to that may disrupt venture itself, or do you believe?
I think we're going to have people making investments for the foreseeable future. Could it get disrupted at some point? Sure. But like, will there be other things? Yeah, there's going to be alternative revenue-based financing. There's going to be lots more money coming into venture. So we'll have to keep redefining. But I think the bigger thing is, as the sources of capital become more varied, we also have many more founders coming into the fray. And so I believe there will always be room for people who are, as I think we are boutique. We're not trying to scale our VC fund. We are boutique practitioners of the art of supporting the human beings trying to create the companies that could be the most successful companies in history. And I think there'll always be room for that niche boutique.
Love it. So I think on that note, I'm going to close there. So thank you everyone for watching. I really
appreciate you being here and asking the questions.
Yeah, thank you, Roy, for joining us. So for everyone watching, this is RBL1 Live. You can join us on Tuesdays and Thursdays during the week at 7 p.m. Eastern Time. Roy Bahat, head of Bloomberg Beta, thank you for joining us tonight.